Hello, Anthony.
Hello, Claudie.
Today we're here to talk about the IRS. Are they sending out fraudulent notices?
Yeah.
This can be confusing because the IRS is constantly talking about scams. There's scammers everywhere pretending they're the IRS.
Yeah, there's always a new scam, it seems all the time. There was that big one that was shut down in India, that they were able to find those people in India. But I think I read somewhere that they actually didn't get the ringleaders. So something like that sort of had that massive amount of success where they were able to claim they're the IRS and say, hey, send us this money and or send us a gift card from Target or whatever the case is. There's going to be imitators. If they're not out there already, you can expect there to be an imitator because, here's the thing. The stakes are so high and it's so easy to believe that the IRS, that there would be a bill. One day you come home and here's a big bill from the IRS. So it's quite easy to believe because it happens all the time.
Okay. Now, if we want to talk about the IRS potentially sending out their own fraudulent notices, we need to put some puzzle pieces together.
Yep.
Okay. Puzzle piece number one is fraud. You say fraud has two parts.
That's right. So I'm kind of making a big claim, I guess, or maybe I'm arguing a big claim. I'm not necessarily saying they're fraudulent, but if someone else wanted to make the argument that the IRS is sending out its own fraudulent notices, well, this is where we would look to it. Fraud has two parts. Okay, it's just not doing something. It's doing something with the intent to defraud. So there has to be an act and there has to be the intent. Now, in this case, the IRS is sending out incorrect notices that have the wrong amount of tax proposed due on it.
Is it higher or lower than what you actually owe?
It happens to be higher, and it can be really a lot higher. So just sending out a notice of itself, a wrong notice to say, hey, inflated tax bill, that by itself, that's not really fraud. That's just a mistake, right? That happens all the time. Mistakes are made all the time. So that's not really news. But this is what's interesting. The IRS is aware that these notices go out that are inflated, and they haven't done anything to stop it. So there we go. What happened is that the law, what you learn in law school, is that the act you do can be an act of omission. When you have a duty to fix something and you don't, say if you had a toll bridge and you knew there was a hole in it and people would fall through it, and you just said, hey, here, come on over, and people fall through the bridge to their icy death. I don't know why I had to go to death. All right. They would say, okay, your act was omission. You had a duty to repair that or duty to warn, and you didn't do that.
Got it.
Well, that's what I'm saying here. The IRS has a duty to fix it, and it's not.
Okay. So puzzle piece number two, talk to me about the alternative minimum tax, or AMT.
Yeah, so it's going to get a little crazy because we've got to put a few things together in order to put it all together. So we have the alternative minimum tax. And it's something that was passed into law in 1969 when Congress, whatever, they got all hepped up saying, there's some people not paying taxes this year. And I'm sure it was something based on nonsense because somebody had a big deduction. Yeah, because I had a business loss, and it's called losing money. That's why I have a deduction. But they got it in their heads that there were rich people who weren't paying their fair share, so they came up with a completely parallel taxing system, right? Because our federal income tax system isn't complicated enough. We need a parallel system to make sure people pay some sort of minimum tax.
Okay.
So that's called the AMT. That was first introduced in 1969. In 1982, they formalized it a little bit more and called it the AMT. So it has a different tax rate and it's sort of a different tax base. So you'll come up with a different result. Now, what happens, the way the law works, is either you're going to pay the higher of either your AMT or your regular tax. Okay, so that's how it is. Okay. And it's kind of funny too. If you think that there's actually an AMT you might have to pay, that doesn't mean you're actually going to pay taxes. Doesn't mean you're actually going to have a tax bill that due or not do a refund.
Okay.
Right. Just to make it a little bit more complicated.
Okay.
So the way your tax software is going to calculate an AMT, and it has to do that, right? Because you have to know, well, is this really going to be the higher number or is the other one?
Okay.
So typically for our clients, our software is going to populate that AMT calculation. That's on IRS Form 6251.
Got it.
Okay. And it goes through a whole bunch of stuff, the tax base and the tax rate. Now, these are some important lines to consider. Okay. So when you get to the bottom of the form, you have line 31, which is what I call your initial AMT. To say, hey, this is kind of the number we're going to start with. Then you have line 32, which reduces your foreign tax credits. And then you have which gets you line 33, your tentative AMT. But that's not who knows if you're really going to pay that, because you have to compare that with your regular income tax. Now, if we compare your tentative with your tentative AMT with your regular income tax, we'll actually find your actual AMT to pay. Now, for most people, their actual AMT to pay is a big fat zero.
Okay.
Because your regular tax is higher. For those who have the AMT where it triggers, there's going to be a number there.
All right.
So line 35 is the number. Okay, so
number.
That's the number, right?
Okay.
Right there.
So far, I'm keeping up.
Okay.
Let's talk about puzzle piece number 3, the IRS Automatic Underreporting Unit, or AUR.
AUR. Okay, so this is a really important thing, and this is something that happens, and I think most people understand this by this point. There's third-party reporting, which is another fancy way to say 1099 or W-2. Somebody who gave you money is required to send proof that they sent you money for something to the IRS, because the IRS doesn't trust us, to be honest. But I guess they trust people, and the penalty for not sending the W-2 or 1099 is that third party won't get the deduction or might have a problem if they don't do it. So if you give money, you always have an incentive.
Oh, I was going to say holding something over people's heads seems to be the...
Yeah, there's a lot of that.
Yeah.
Yeah, there's a lot of holding that over your head. So this is wonderful.
Incentive is a nice way to say it.
A lot of incentive, right? Yeah, a gun to your head a little bit. So that's why, people always issue a 1099, usually, because otherwise they're going to have to attribute income to themselves. So now if you don't file a tax return, the IRS doesn't have much problem processing a tax return for you because, we can see most of your income. The only time they have difficulty is if you're getting things through cash or through a means that there is no third-party reporting. But otherwise, in most cases, they're going to do a return for you, and that return is going to be more than what you did if you did the return yourself, because they're not going to do any favors.
The incentive is?
The incentive is they want you to file your return, because if they file the return for you, at no point did you sign on a penalty of law that this was true and accurate.
Right.
So they want to get you to say, we got you, you lied.
So on this SFR, or substitute filed return, for instance, they won't take out any deductions of charity.
They won't do charity. They will typically give you a standard deduction, and they'll match your last filing status.
Okay.
But you might not get much more. So usually in every case, a lot of times they could be wildly inflated, especially when you get to stock transactions. A broker could report a 1099 of when someone sells something as if the entire sale was a gain.
Gotcha.
Very few people buy their stock at zero. So that's one where they'll get, a wild tax bill comes way down because we actually we'll include what we actually paid for it.
Yeah, my penny stock's not doing so well.
Yeah.
All right, puzzle piece number 4. What is a CP2000 notice?
Okay, so if you do file a tax return, the IRS will go through, and you forget to include a 1099 and just say, 1099 for $500 of interest income. The IRS will take that 1099, run your entire return through their software, because they have to, because one thing that $500 might affect other parts of your return, including, say, your AMT.
Okay.
It could, probably won't, but it could affect other things. So that your whole return, because everything's sort of in relation to everything else, you just can't add that in and say, hey, just put the tax rate on that and tack it on. No. You have to go through the whole return. So that's how it works. And then after the automatic underreporting unit processes it, it generates a CP2000 notice, which is a proposed change, but they do give you an opportunity to send in the money. If you do happen to agree with it, they'll give you that opportunity to pay them, or you can dispute it and give you reasons why.
Okay.
So
let's put all the pieces together.
Okay.
The potentially, maybe, fraudulent CP2000 notice overcharge.
The automatic underreturn unit runs your entire return. Remember, so it runs your entire return through the software. Okay. So if you're missing that $500 of interest income, it's running that through. It's also running through your AMT form 6251. Really shouldn't be much of a problem, though.
Right.
Except there's a problem. There's a big problem.
Let's go back to those really important lines.
Remember the important lines. We had line 31, initial AMT. Line 32, foreign tax credits to reduce initial AMT. Line 33, tentative AMT. Line 34, regular income tax. 35, your actual AMT to pay. Their software stops inputting at line 31 and treats line 31 as line 35.
But wait, there's more. Okay.
Yeah, so that's a significant issue because you're not getting credit. So what your CP2000, now you're going to owe some tax for whatever that you're likely going to owe some tax for whatever thing you didn't report. Okay, or maybe you won't because there was a reason why you didn't include it or there was something to offset it. But you could see that your AMT could actually be really high if you're stopping at that initial AMT and you're not comparing your actual tax paid, because your AMT is going to be very high. It's a 26 or 28% tax rate.
Wow.
So of your tax base. So you could have somebody with, $10,000, $25,000, $50,000, $100,000 of AMT that the IRS is now spitting out the CP2000 saying you owe $100,000. Now, here's the thing. The IRS knows about this error.
How do we know the IRS knows?
How do we know?
How do we know the IRS
Because guess who told me?
Who?
The IRS did.
Oh.
Yeah, this is where, this is sort of the, I guess I get a lot of heat for bad-mouthing the IRS, and it deserves it. But at the same point, there are a lot of good people who work at the IRS.
Sure.
Let me tell you, yes, there are. They've been helping me out for years. I mean, some of my best friends who will tell me exactly, this is the issue. This is what's going on. They're not fixing it. So you have an issue where the technical workers know there's an issue, and it's just a vast entity that doesn't have to respond to things the way a corporation would.
Right.
If a corporation was doing this, was sending out notices for bills, it knew it didn't have a right to collect, they would be out of business. They would be chased down. The IRS knows about it. Now, this is the thing. They're not necessarily publishing this. By the way, we're doing this. This is something where, I'm, maybe the person at the CP2000 wanted it known because they're very frustrated.
Oh,
And
I
if
can
you could,
imagine.
you're wasting time. You're really not on the side of truth and justice. And you know that. This is complete nonsense.
Right.
I've told them to fix it. They won't fix it. I get calls from irate people for something they don't owe. We look really stupid. Will somebody come and fix this, please? And they haven't.
Well, a shout out to didn't one of our attorneys bring this to our attention?
Yeah, that's Sean OConnor.
Very sharp.
Who did, yeah, and he just said that he did let us know because this is something that happens quite a bit when you leave off an income item.
Yes.
So if it won't happen if everything's on there.
Yep.
But if it runs through, it's going to happen, and that's where you could really see a huge bill. Now, I mean, the thing is the fix. The IRS knows the fix, but it is a couple hours. I asked him how long he was on the phone. He goes, no, it was a 40 minutes till they picked up the phone, and then it was another hour back and forth.
Oh
Even though this is something they're really don't contest,
Yep.
they're aware of, to get everything all set, that still was, a couple hours. And so that's really, you need to know what you're doing, you need to know who you're calling, and still 2 hours for something that isn't legitimate.
And that's an attorney. Imagine a regular old Joe taxpayer trying
Yeah,
to,
I mean, right,
how
and
long
you're
are they
not-
going to be on the phone?
Right, and when it's also personal to you, too. That not only it's someone's throwing this massive bill at you, and you're looking at that as a real number.
Yeah.
And it's scaring the crap out of you.
And we are going to be forwarding this to TIGTA.
Yes.
So maybe they can help.
Yes, the Treasury Inspector General, and we're generally a fan. There's only one thing we didn't think was so great, their OVDP report. Their Offshore Voluntary Disclosure Report, I don't think they did a great job on that one. I think they just sort of took a brief that somebody in the OVDP department wrote.
them.
But generally what you get is some really great insight and some really talented people trying to get to the bottom of this. And it is really something that somebody needs to fix the software.
Yep. All right. Well, if you're concerned that you might even have an issue with something like this, don't hesitate to contact us. We can help. 888-727-8796, info@irsmedic.com. Get more information at irsmedic.com. You can like and comment below and subscribe to our channel. When we get updates on this, we'll do another video and let you know if anything changes, and you'll get more awesome tax info. Thanks so much for watching.